at the open. All-time high for the S&P 500.
It's your boy, Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Becky quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater. Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the futures, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Make profits. That TTG money gang, we some snipers.
Hey yo, what's up everybody? What's going on, folks? Welcome to the True Trading Group live stream. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. And in case you guys didn't know, we were a Benzinga FinTech Awards finalist last year for Best Data Analysis Tool. We are coming for the award this year. Our AI tool that we have developed and that we have put out, I'm telling you right now, trader to trader, not speaking to you as co-founder of True Trading Group. I'm speaking to you as one trader to another. It is the best damn tool that is available on the market today for a trading assistant. I'm telling you that hands down, not just because it's ours. We're coming for the award this year, but we're also the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We cover all styles of trading, day trading, swing trading. We also cover long-term investing. There's literally something for everybody at TTG. Now, when you join, you get immediate annual access to around $15,000 worth of education tools and resources that have helped thousands of TTG members to make money, become successful, no matter how much time they have, no matter how much money they're starting with, or no matter how much what their experience level is. See, at TTG, you guys are going to gain access to a comprehensive level of education, which includes beginner courses for like stock market foundation, chart patterns, technical indicators, shorting, swing trading, advanced options, meaning multi-leg option trades, even trading during a stock market crash, how to make money when markets actually go down. Yes, it's possible. Learn how to short, learn how to buy put options, learn about inverse ETFs. There's a lot of ways you can make money when markets go down. There's also courses for futures, options, crypto. There's even a course that teaches you how to do your taxes, not to mention my personal favorite, the trader psychology courses. 80 to 85% of trading is mental. Trading is not hard because VWAP, Fibonacci's, and moving averages are hard. It's because battling yourself and leaving emotions out of every decision that you make is extremely difficult. That's what makes trading hard. You're also going to get access to all of our moderators, 8 professional full-time trading mods, swing trading, day trading, options, futures, scalping, long-term investing, and core trading as well. You get access to all of our advanced tools and technology, TradingView's premium charting software, Benzinga Pro's real-time newsfeed, a simulator to help you practice with fake money, unusual options activity, options flow, dark pool data, congressional trading data, short data, of course, our AI trading assistant, custom scanners, and our community. Our community, what a community it is. 10,000 members from 115 different countries. You guys get access to all of it. And our real-time translation for seamless communication. Obviously, having members in 115 countries, many of our members, English is not their first language, but we do have real-time translation on our platform that allows our members to communicate seamlessly with one another and also with the moderators and the pro traders that are at TTG. You get our video library. It has over 1,000 hours of different workshops covering different topics. And of course, nothing but transparency and trustworthiness, as there are daily trading record submissions from our brokerage accounts right onto our platform, where the moderators and I have collectively been able to maintain a cumulative win rate on all of our executions of just around 80%, now going on roughly the last 4 years. We're 4.7 out of 5-star rated on Trustpilot, over 2,500 reviews, with a 78% retention rate amongst our members and a less than 2.5% refund rate on the platform. And last but not least, we do something that no other group or platform is going to do, because they're simply not as confident in their ability to help their members succeed as we are. We offer a double your money back guarantee when you join our platform. That double your money back guarantee is simple. You join, you pay a membership fee. If you go through our courses, pass our quizzes, and attend one of our study group sessions, do that at your own pace, on your own time. And if you are unable to make enough winning trades to equal the membership fee at least one time, we'll give you back double the money that you spent to join the community, because it means we wasted your time. Nobody else is going to offer you that. We do. We can, because our refund rate is less than 2.5%. So if you're wondering why I should really listen to anything it is that I discuss on this channel, it's not because I have a 100% win rate. It's not because I'm never wrong. It's certainly not because I can predict the future. It's because I didn't figure this out watching YouTube videos or sitting in Discord chats. I began my trading career working at T3 Alpha Fund in New York City, my first job right out of college, where they had me go through a training program before I was ever able to touch $1 of the fund's money. And then 2008 happened, and that was the Great Recession, the big stock market crash, and the same year that I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and head trader of TTG, along with my team of 8 professional full-time trading mods and an over 30-person staff. We've helped thousands of members from all over the world to reach their goals. So if you guys are ready to learn, trade, and profit for real, you've come to the right place. 6 nights a week, Sunday through Friday, I go live right here on this channel with myself, some of our other mods, and some special guests. Will drop golden nuggets, give you free lessons, education, trade ideas that can help you guys become better traders. So if you've not yet done so, smash that like button and show some love. Subscribe to the channel and turn on your notifications. Make sure you never miss out on any of these live streams. Welcome, all of you. Oh, yeah, Gio had some great. Yo, Gio's in the house. What's up, Gio? Yeah, Gio had some fantastic calls today on the SPY, man. So, Gio, you see Gio commenting there inside of the chat. Gio's one of our moderators. Gio is actually a former market maker. He makes me look like a total newbie. The guy's been trading for 20, 25 years, Gio? Guys, you make me look like a newbie. You got me beat by like 7 or 8 years. Something like that. But yeah, Gio, some great trading today. So for those that don't, Gio's trading style is a scalper. So Gio scalps, right from his market maker backgrounds, tons of executions, quick executions, and was all over the SPY late in the day, late in the afternoon, which is honestly the best trading action that we had today. Today was a very slow, choppy day to kind of start things off. There's a lot of anticipation. I feel like there's a lot of hesitation, really, I should say, coming into the jobs data that we're going to be getting this week. The U.S. labor report's coming out on Friday. I expect a 4 handle on it. You got the JOLTs number today, lighter than expected. And the market is trying to play this balancing act over the next couple of weeks. I think you're going to see throughout the whole summer, really. And the balancing act that you're going to look for throughout the rest of the summer is the slowing economy good or is it bad? Now, you might be like, what does that mean? Allow me to explain. You need the economy to slow in order for inflation to get back to 2% for the Fed to cut rates. But you don't want the economy to slow too much that the economy actually falls into a recession. The market right now completely believes the soft landing is the most likely scenario. And I would agree that right now, soft landing is the most probable scenario. Does that mean a recession is not possible? No, a recession absolutely still is possible. But as it stands right now, soft landing seems to be the most probable scenario. And if that wasn't the most probable scenario, the market would not be 1% off its all-time high. If the most probable scenario was a recession, the market would be most likely somewhere down here at this point in time. But we are not down there. Inflation has begun to move itself back to the downside after 3 months in a row of a higher than expected number. But inflation is beginning now, it seems like, to kind of roll itself back over. Does that continue now for the next couple of months? We got a CPI number coming out next week. That's going to be big, obviously. And you got the labor report. People want to see, not people, nobody really wants to see the unemployment rate go up. Nobody wants to see the labor market soften. But the reality is that the labor market really does need to soften, and it is softening. I mean, just barely over 8 million job openings. That's down well over a million. You go back to just last year, we were having 9.5, 9.2 million job openings. Now you're down to 8.0 change. It was expected to come in at 8.4. So you're talking 350,000 job openings less than what was anticipated. So very clear signs that the labor market is softening, and you're getting to a point of an equilibrium almost where you're not there yet, but it's moving in the right direction where the amount of job openings will eventually work itself to be equal to the amount of people looking for a job. And that is really when the labor market has completely cooled. Because if you go back to 2022, 2023, you had 9.5 million job openings, but you had nowhere near 9.5 million people looking for a job. That is beginning to move back into a state of balance. I expect a 4 handle on that unemployment number on Friday. I honestly think that if the unemployment rate goes down on Friday, I think it is possible the markets actually move lower. And the reason why I think the markets will move lower if the markets will move lower is, see, I'm really torn on this. I really am. I'm really torn on this. And I don't think the market really necessarily knows either. Because if you look at the last couple of trading days, you've had yields pull back 2 days in a row, and stocks actually over the last 2 days, not counting today, as yields have pulled back, stocks also pulled back with it. Oil is cratering. Now, oil is down big. And what does that tell you? Okay, when oil starts to move to the downside, as oil has moved to the downside, you look at the last 2 days. I mean, yeah, some of this has to do with OPEC, and there was some OPEC news there. But is it OPEC, or is it really the anticipation of a slowing and weakening demand? It's odd to see oil prices moving lower going into the summer, because in the summer is typically when demand for oil actually moves higher. People are traveling, people are driving more, people are going on vacations, etc. And there's a lot more driving, obviously, that gets done. So gasoline gets used up a lot more. Usually the demand for oil is higher, and that then pushes prices higher. So to see oil dropping as aggressively as it has over the last week makes you wonder, is oil dropping because there is a concern about demand? If there's a concern about demand, then that means there's a concern about the economy. So I'm actually paying a very close attention to oil. So you've seen oil go down, you've seen yields go down. So when you see that type of price action, it makes you feel like, well, maybe we're starting to get a little concerned about the status of the economy. Maybe the economy is slowing a little bit too far. GDP numbers are less than 1.5%. So you're moving towards that zero number. So these are all things that you have to be paying attention to as we're trying to figure out, are new all-time highs really in the cards? Or are we about to experience a pullback in the summer? I think we're going to experience a pullback in the summer. I know Tom Lee was on CNBC earlier today, and he was talking about a 5,500 target on the SPY here, within the next month or so. And he said a $150,000 target for Bitcoin by the end of the year. And although both of those, I can definitely see either one of those happening, especially with Bitcoin. I actually really do like the chart that we have on Bitcoin. I really just think that Bitcoin is just gearing up right now for this flat top break of 72, 73K. And a break of that, I think, you look for the low 70s to become a new level of support, and you look for the follow through move then to take you up to new highs. Is 150,000 in the cards this year? I don't know. That's a 100% move from here. Is it possible? Sure. We've seen Bitcoin do much crazier things than that. But I think 150,000 this year might be a little too optimistic, but who the hell am I to say? Tom Lee has been spot on ever since COVID. The guy really has, even in the face of the markets really selling off in 2022. He stuck by and he held through his guns. And then even during the big pullback in September and October of 2023, he stuck by his end of the year target for 2023. And he was dead right as we closed at a fresh new all-time high. And he said that even when the markets were down here in October, he still said, I think we can push up and close up at highs. And he was right. And he was right about it. So he's thinking that you're looking at a target of 5,500 on the S&P. This is the SPY, but nonetheless, that would put the SPY up around here this month. And is it possible? Sure. What would it take to get us there? What I think it takes to get us up to that mark is going to be a stable labor report on Friday. Stable, not like if you see a drastic jump in unemployment, like a 3.9 to 4.2, then I think the markets are not going to like that at all. I think the markets are going to be okay with unemployment as long as it's in the low fours. If unemployment starts to get to the mid fours, I think that's when the market starts to get a little concerned. The reason for that is because that would give you a 1% increase in unemployment, which is enough for economists and organizations to label a recession if you get 2 consecutive quarters of negative GDP, because that's a technical definition of a recession, 2 consecutive quarters of negative GDP. But we had that in 2022. The reason why nobody labeled 22 as a recession is because the unemployment rate actually went down in 2022. Okay. Unemployment went from like 3.7, 3.8 to 3.6, 3.5, 3.4, the bottom, 3.5, 3.6, 3.5 in 2022. Nobody's going to say there's a recession with unemployment actually going down. Okay. Nobody. So typically it's the 2 consecutive quarters, but also 1% bump in unemployment. Well, if you get to 4.5, that's a 1% bump from the 3.4, 3.5 unemployment low. Then you can look at actually labeling a recession if that's the case. So I think the market gets a little nervous as you pump closer to 4.5. But if you get a 4.1, I think the market just kind of brushes that off. So I think that you need a stable labor report on Friday. And I think you need a lighter than expected CPI number. You had January, February, March were horrific. Okay. Horrific CPI numbers. You got not 1, not 2, but 3 consecutive months where it was higher than expected. You had a couple of months in there with the different categories where inflation had actually accelerated. Others kind of stayed stagnant, but they did not go down. And then finally, over the last month or so, you've seen finally in the month of April, you did see a lighter than expected CPI. We got that number a couple of weeks ago in the middle of May, and that's what caused the gap up to the all-time high, was right there when the CPI number came in under expectations. I think you're going to need another under expectation CPI print in order for the markets to really take out the all-time high this month. I will switch my bias too long if we do get those 2 things. Okay. So if we get an inline or a stable labor report and we get a lighter than expected CPI number, then I will actually look for the markets to take out that new all-time high. But the one thing that I am looking at, the reason why I was saying to you that I do think that a pullback into this area is likely over the next couple of months, is because of a setup that we have on the weekly chart on the SPY. And I want to bring it to your attention. I've talked about it on the live stream for the last couple of instances. I just want to bring your attention to this and show you what I'm seeing. I see bearish divergence on your MACD on the weekly. Okay. You had a new cycle all-time high on the S&P or on the SPY. This is a chart of the SPY, but you had a lower high on the MACD. So that's an example of bearish divergence. That's signal number 1. Number 2 is you had a signal line crossover to the downside that just happened a couple weeks ago. Now let's take a look. There is the signal line crossover to the downside. The last couple of times you've had a signal line crossover, the weeks and months that followed were a very clear directional trend in the direction of the signal line cross. Let's look at them. You go back to the last time that this happened, it was November of 2023. Well, if you look at November of 2023 and you see what the markets did at that time, you can see that we extended higher for the next 5 to 6 months and made new all-time highs. But if you go back even further than that, the last time you had a signal line crossover to the downside was mid-August. What happened when that signal line crossover took place? Well, here's your signal line crossover. We went higher for the next 2 to 3 weeks, but eventually we went down for the next 2 months, right? You went down for the next 2 months. Then go back to the last time that you had a signal line crossover, and it was November of 2022. And here was your signal line crossover. And you can see we kind of we're stuck in the mud here a little bit. But I mean, honestly, from that point, the direction was obviously long for the next several months to follow. It's not often that you get these weekly signal line crossovers on the MACD, but over the last couple of years, every time you've had that signal line cross, a directional move has followed in the direction of the cross that has lasted not just a couple of days, but it has lasted several weeks. And this is why I'm sitting here and I'm looking at the market saying to myself, based on the MACD signals, I think a pullback is coming over the course of the summer. And does it come because inflation is higher than what was expected? Or does it come because the economy is weakening more than people had expected? Is it a combination of both? Does the economy weaken, but inflation doesn't necessarily come down and people think the Fed is stuck between a rock and a hard place? I don't know what that catalyst is going to be. I don't know what the fundamental reasons for it are. But what I'm telling you is just what I'm seeing on charts and when some of the things that I'm starting to notice. I will admit that the last 3 trading days in the SPY certainly do seem bullish. Right after the 2 reversals that we had on Friday and Monday, we sold off in the morning. We rallied back hard on Friday and Monday. And then today we closed up near highs. And it certainly feels like this market wants to push higher and go up there and test those all-time highs. It's definitely what it feels like. All right. But I'm watching for, I'm suspect and I'm cautious of a kind of a wipeout gap down where we have a gap down and nobody really understands why we're gapping down, and that just triggers it. Like you can just have a situation. I'm saying it happens tomorrow. I'm just giving you an example where let's say you have all of a sudden you open up tomorrow and you're like, oh man, the market's down 0.5, 0.6. And like, why? What's the news? And there really isn't any news. And when I see something like that, I'm going to say, okay, maybe that could be it. That could be kind of that trigger. And all of a sudden the market starts to pull back when people least expect it. And then things kind of get a little ahead of themselves. And then that pullback starts to happen. The sharpest, fastest pullbacks happen when nobody's really expecting it. That's the whole point. So those are just some of the triggers that I'm looking for to give me some type of a pullback. But if I get an inline labor report and I get a lighter than expected CPI next week, I think you got to just continue to look long. Okay, I think you got to continue to look long if that is the case. I don't know. I think the market's just going to be able to just push things higher if that is what you get. Right now, the market's okay with just 1 rate cut this year. You know, maybe we get 2, but right now the markets are really firmly priced in that 1 cut. Maybe you get 2, September and then December. But the June, July, there's no Fed meeting in August. The June, July cut. But you do have Jackson Hole, which is going to be interesting. You do have the Jackson Hole conference, which is always a catalyst for the markets because it's Jerome Powell gives a huge speech, or the Fed chair gives a huge speech at Jackson Hole. And that will undoubtedly move markets. It has for the last 3 years, and I expect it to again this year. But that's kind of overall market stuff. That's overall market stuff. I did not make a trade today. So I don't have any trade recaps to go over with you guys. We came into the day today. I didn't necessarily like anything today in the pre-market session. So I really just spent the time today working on, furthering out the AI tool that we've been developing at True Trading Group, our AI trading assistant, and working with the development team, making tweaks and working on some stuff with that. So I was able to get some business stuff done today on the end of business stuff done today with True Trading Group. I did not make any trades today. It's not often that I don't make any trades. We were pretty active the last couple of weeks. But today I just didn't really like anything in the pre-market. I felt like today was going to be a choppier day, and I just kind of sat things and waited it out. So what I will do today on this live stream is, instead of going over with you guys some trade recaps and go over some trade ideas and expectations for tomorrow, what I think I would like to do is actually do a segment of grade my stock. Yes, we're going to do it today. We're doing it today on this live stream. We're doing the segment of grade my stock. For those of you that don't know, we started a new segment on this YouTube channel, and it's called Grade My Stock, where you type ticker symbols in chat. I give you a grade, A, B, C, D, F. Okay. Now, these grades are based on a combination of technical and fundamental thoughts analysis. It's totally 100% my opinion. A means I love it so much, I would buy this damn thing right now. I would never think about selling it. B means I really do like it, but maybe I wouldn't buy it at this moment. C, whatever. Could go either way. D, I really don't. I don't like it. I think it's hands off right now. It's, you know, F would be a sell. Don't ever mention this ticker symbol to me ever again. I have no intentions on owning it. I have no intentions on buying it. They're totally, completely my opinion. Okay. But it's a segment that we do that a lot of people really enjoy. And I feel like we're going to do that here tonight. Before I get into the grade my segment, I do want to make sure that anyone that is not a member of True Trading Group is aware that you are able to participate with us and trade with us for the next 7 trading days for $3. Friday is going to be very important. You have the U.S. labor report coming out on Friday, and the following week is going to be the CPI number for May. This is going to be a very, very, very important next couple of trading days. We have a 7-day trial that is 7 trading days. It's not 7 calendar days. So you can join today, and then Wednesday will be day 1 of your trial. Thursday is day 2, Friday is day 3, Monday is day 4. Okay. Saturday and Sunday do not count against your trial. The trial is $3. We charge $3 just to make sure you're a real person. We have thousands of traders on our platform at any given moment during the day, focused on one goal: make money. I will not allow people to come into that chat and jeopardize the integrity and distract and just be disruptive and prevent people from reaching that goal. By charging you $3, it ensures that you're a real person. You're serious enough about this to put your credit card information in, which tells us if you're serious, we're serious about having you as our guest. It'd be our pleasure to have you part of the group for 7 trading days, see how we operate, experience what it's like to be part of the True Trading Group family. All you need to do is go to ttgthree.com. Look, everyone's typing ticker symbols. Everybody's typing ticker symbols. They want me to call out their, not yet. Hold the ticker symbols. We're not doing the grade my stock just yet. But for those of you that want to join our trial, do yourself a favor. It'll be the best damn $3 you've ever spent in your life. You've all spent more than $3 for a cup of coffee. Go to ttgthree.com. That's ttg3 spelled out.com. Enter your name, email, phone number, click yes, I want this. Fill out the form, pay $3, get your butts in chat. Download the mobile app so you can be connected and get the real-time push notifications when our moderators enter and exit positions. This way you can follow along with what you're doing. 82% of our members have full-time jobs. So if they can do this, so can you. Just download the mobile app. Now, the $3 is a one-time payment. There's no automatic renewal. There's no reoccurring fee. There's no automatic upgrade. Okay. It is a one-time payment of $3. So go to ttgthree.com and you guys enter your name, email, phone number, click yes, I want this, fill out the form, pay $3, join. Again, there's no automatic upgrade to an annual membership. If you forget to cancel, we don't play games like that. I don't want you to be a member unless you want to be a member, okay? There's no automatic upgrade. There's no recurring fee. It's a one-time payment of $3. So go to ttgthree.com. Join our trial now. All right, guys, let's go ahead and move on to grade my stock. Go ahead, folks. Type those ticker symbols away. Type them. What ticker symbol do you? I'll close my eyes. I'll open them in 3, 2, 1. And the first one I see is Palantir. The first one I see is Palantir. So let's go to the charts and let's talk about Palantir. So for me, I'm giving Palantir like a B plus. I'm giving Palantir like a B plus. I actually do like Palantir. I think Palantir has a lot of promise and a lot of potential with AI in the future. And the reason why I avoided Palantir, I mean, I traded it, but the reason why I avoided it in the long-term portfolio back in 21 and 22 was because I just wasn't comfortable with how reliant the company is on government contracts. And they really weren't building out the private side of their business. And I just felt like they needed to be less reliant on government contracts and have more of, that other business. But the last couple of earnings calls, they've actually talked about it. They've talked about that side of their business. They are growing that side of their business. I do like that for Palantir. I think that you have a nice support level around 21 to $20. The 200-day moving average is coming up into play. The last time the 200-day moving average was contacted was the end of January, early February, and that was a beautiful support level for it. You also had the big gap up here. I think this was earnings. Actually, we traded Palantir actually on this break, and I'm pretty sure that was their earnings. But nonetheless, the 200-day was support. Now you've established this nice support level down here in the low 20s, which was an area that used to be previously resistance, and then now you see we've dropped into this level and it's acting as support. It's crowded in here. It hasn't been a really easy day trade or swing trade. It is very crowded in this $1.50 range over the last month. You can see we've kind of been stuck in this channel over the last month, and you've kind of been kept a lid on with some major moving averages. The dark blue lines are 50-day, the purple line is your 100-day, and you kind of have been put on, feels like a lid has been put on Palantir. But you have this gap entry at 22.50. What I think you can do with Palantir is look to see if you can break through 22.50 and then see if there is an extension move at that time. I'm not crazy about Palantir for the trade right now. I think there's better looking charts for a day trade or a swing trade, but I do like Palantir enough to say I think that if you don't own it in the long-term portfolio and you're looking for places to buy it, I think that your first nibble being in the low 20s is a decent spot. I'd like it a lot more in the mid-teens, $15, $16. I think that's the money spot. And I'm a buyer of Palantir. If you do see those levels in the next couple of months or at any point, I'm a buyer in those levels. But I don't think that there's anything wrong with scooping this thing up around $21. Next up, NVIDIA after the split. My rating on NVIDIA is an A. It's always an A. I guess that's not fair, because if I label it an A, that means that I would buy the stock right now, and I would not buy NVIDIA right now. You guys have to realize something. I'm in a very different situation, and members of True Trading Group are in a very different situation, because I've been a very, very outspoken bull on AMD and NVIDIA as two of my favorite stocks for the last 4 years. Okay. If you were a member of this channel, which many of you were not back in 2020, but during the COVID crash of 2020, I was very vocal May and April on this YouTube channel. You are more than welcome to go back and watch my videos from that period of time. I was very vocal, telling everyone I am backing up the truck and I'm buying everything I can get my hands on. I thought COVID was the best buying opportunity that we've seen since 2008. I did not have the type of money in 2008 as I did in 2020. So I was really able to take advantage. And the money that I put into the markets in 2020 was the best investment decision I've ever made in my entire life, because of what that money has turned into over the last couple of years. And the two stocks that I kept telling people, whenever anybody would ask me, what should I buy? What should I buy? Everybody's looking at stocks like American Airlines because it's down 75%. And I'm saying to myself, why do you want to buy the stock that's down the most? There's a reason it's down the most. People think, oh, it's down the most, therefore it has to go up the most when the markets recover. Wrong. When markets crash, don't buy the stuff that's down the most. Buy the stuff that's down the least. Because you have to understand the mindset of a money manager or an institution on Wall Street. When the markets crash and they need to de-risk, they're going to sell the stuff that they like the least. That's the first stuff to go. Okay, there's a reason why Carnival Cruise Lines and American Airlines went down 75, 78% during COVID, and Apple went down 25%, because Apple's the last stock that anybody wanted to sell. But American Airlines and Carnival Cruise Lines were the first stocks they wanted to sell, because obviously nobody was able to travel. So if you went and you dumped all your money into American Airlines, okay, during COVID, well, guess what? You have made absolutely jack shit on your money, because it hasn't gone anywhere. right? The stock crashed in 2020 all the way down to $10, $11. Well, guess what? The stock is still at $11. Meanwhile, NVIDIA did that. Meanwhile, Microsoft did that. Meanwhile, Meta did that, right? AMD did that. Palo Alto did that. These are the stocks that you guys want to own when markets crash. You don't want to go and buy the crap. You want to go and buy the best. So let that be a lesson for everyone that dumped their money into all the stocks that were down 75, 80% during COVID, and you have nothing more than a 15% gain over the last 4 years to show for it. When people that are in NVIDIA are up 1,600, 1,800%. We bought NVIDIA in 2020 at $58 a share. $58 a share. It's at $1,164. I am going to own NVIDIA. You can fast forward 5 years from now and you can ask me, Mike, do you still own NVIDIA? The answer will be yes. The answer will be yes. I'm going to own NVIDIA for a very long time. If you believe in AI, great. Okay. If you believe in AI, then I think you've got to own NVIDIA. Now, what I will say is eventually this thing will come back to earth. Okay. People forget that NVIDIA was down 60% in 2022. You will encounter a year where the stock probably goes down 20, 30, 40% and it falls out of favor. And the reason it's going to fall out of favor is because everyone's going to say, oh no, AMD's catching up. Oh no, this company and all these different semiconductor companies, they're all catching up. Qualcomm and Intel, and you got Lam Research and ASML and all Micron and all these semiconductor companies that either make the chips or they make the parts that are needed to supply for the chips. Whatever the reason, people are going to start to say, oh no, is this another Cisco? The reason why they compare it to Cisco is because Cisco exploded during the dot-com bubble. And when the dot-com bubble bursted, the stock never went back to those all-time highs. And people are nervous that that's going to happen to NVIDIA. I don't think that's going to happen to NVIDIA, but there will come a point in time where people think it will. And the stock's going to sell off. It's going to sell off hard because of that. And every single person that's asking right now, should I buy the stock at 1160 or should I buy the stock after it splits? Whether the stock splits tomorrow or today, it's going to split in about a week. It doesn't matter. You're paying the exact same price. Don't think that just because the stock is $1,100 now, it's going to split down to 110 or 116 that, oh, I'm buying the stock cheaper. No, you're not. You're buying the stock at the exact same valuation that it is today. It's just that the stock's being split. So for every one share that you own, you're going to own 10. And the price is going to go from 1160 all the way down to 116. It's the exact same dollar amount. It's just a different structure of the stock. Okay. So you're not actually getting a deal. Okay. And Ronald, welcome to the trial, brother. We got to welcome Ronald. Ronald just joined the trial. So Ronald, welcome. Guys, again, go to ttgthree.com, join our trial. It's a one-time payment of $3, right? So everybody just go on over, join our trial. That's ttgthree.com. But yeah, I do believe there's going to be a point in time where people are going to get nervous. They're going to say that, NVIDIA doesn't have a moat around it to protect it. It's only a matter of time before they see increased competition. It's only a matter of time maybe before the Metas and the Microsofts of the world try to develop their own in-house chips so they can stop buying from other companies. It's only a matter of time before that stuff starts to happen. But I believe that the AI industry is going to grow to be big enough to where it's really not going to matter. And that time period where NVIDIA falls out of favor, that might last an entire year and the stock's down 40% on the year, that's going to be your chance to buy it. Okay. So if you're asking if you should buy it now, you better be damn sure you buy it when the stock goes down 30 or 40% in a year when it falls out of favor. Eventually it will. Nothing goes up in a straight line. You will experience a pullback at some point here. What is it tomorrow? Is it next week, next month, next year? I don't know, but at some point it will. You just have to wherewithal. You just have to have the wherewithal to buy it when it happens. Next up, CrowdStrike. CrowdStrike for me, I really do like CrowdStrike. I own CrowdStrike. I own 3 cybersecurity names. CrowdStrike is one of them. The other 2 are Palo Alto, and I also do own Fortinet. Fortinet's been a little disappointing. Stock really hasn't moved all that much over the last several years, but Palo Alto has been a monster. CrowdStrike's been a monster, and I'm starting to even like CrowdStrike more than I like Palo Alto. Nice little earnings report today. The stock's trading higher on the back of earnings. I love the support level here at the prior all-time high. So you guys can see you had all this resistance back there from the 2020 highs. You took that out this year. It's been extremely choppy up here since you've taken that out, but the area is held. We got to welcome Martha too. Martha just joined the trial. Somebody welcome Martha to the trial. Look forward to trading with you guys. Martha, Ronald, anybody else, I look forward to trading with you guys. Get your butts on the platform, get inside chat, trade with myself and the other professional traders that are in TTG. Remember, it's not just me. There's 8 of us. We share our screens with you. We're live talking to you on the microphone throughout the day, answering questions, providing market commentary. We notify you when we enter and exit our positions. Download the mobile app, everyone that's joining the trial. This way you guys can be connected and get the notifications when our mods enter and exit their positions, all right? So again, to join the trial, it's ttgthree.com. It's a one-time payment of $3. There's no automatic renewal. There's no reoccurring payment. There's no automatic upgrade. One-time payment of $3. So back to CrowdStrike. I love the support level down there in the 270s, 280s. For me, this is going to be B+, maybe even A. I already own it. I do like it. I think this is a $400 stock in the near future. So I am a fan of CrowdStrike, and I think that cybersecurity is going to grow exponentially right alongside with AI. And I think obviously that as AI grows, I think that cybersecurity is going to grow. Cybersecurity is going to just become more and more and more and more in demand, but not only just on an enterprise level. I think you're going to see the adaptation of cybersecurity more in the individual. I do. I think you're going to see more of a cybersecurity, not just from a business enterprise level, but also on the individual level as well. And I just am very bullish on cybersecurity. I have been for a while now, and I am happy to own CrowdStrike. And if you don't own it, I would absolutely have it on the radar. Spots to look for longs, anything under 300. I think the beautiful spot, the sweet spot, is right around that 280. Might be wishful thinking for that level now, but I still like it, and I think there's more upside in the years to come. Next up, Shop. I'm going to give Shop a C. What I don't like about Shop is the recent channel and uptrend breakdown, right? So I'll go to a weekly chart so it cleans it up for you. You see how you had, we obviously had the disaster that was 2022, right? You had this absolute disaster. And that disaster took us back to a massive support level from 2019 and also 2020's COVID low, right? So here you guys can see was that prior support level, and then that level acted as support there again in 2022. And then we finally started to get an uptrend, and you can see we trended higher for about a year and a half. But we've recently broken down out of that channel, and I'm not overly excited about that. Okay, you also have a death cross coming up here where the 50-day moving average is crossing underneath the 200-day moving average. That's right there. The dark blue line and the yellow line 200-day, dark blue 50-day, about to cross underneath to give you that death cross. What I think is a better play is to actually, from a trading standpoint, is a short on Shopify in the mid 60s. So when I take a look at Shopify and I say to myself, okay, well, I've got this previous gap. That gap lines up with the gap down that you had following, that was the earnings. You had the big gap down, right? Became resistance. Now it looks like you're starting to form a bottoming base here. And this does look like a bottoming pattern. And you do have a pivot support level here back from right around $56. Right. So if I take you guys back here to $56, let me delete the channel just so I don't confuse you. And just look at the relevance here, right? Look at all that. See that resistance, and you gapped above it, and then the gap entry was support, and you took off. Now you're back into that level, and it's acting as support. That is a pivot support level. But a break of 56 leads you then to a gap fill down to 49. And what I think you might see here is, especially if the market does move higher and if the market makes a new all-time high, that might pull Shopify higher. And that might pull Shopify right into the 50-day moving average that just came off of the death cross. And I think that actually would be a short opportunity to then ride the stock back to the downside, and I actually like it better for a short than I do potentially for a long. Okay. So that's my thoughts on that one. Next up, I see CELH, Celsius. I will never understand this stock. I don't know why the stock, I really don't know why the stock went from, $2 to $100. I don't get it. I really don't understand it. I don't like any of these like energy drink stuff, but I know it's big, and I feel like, really went crazy on social media. But I got to be completely honest with you. I am so, I really can't help myself but think that the Celsius craze is a fad. I don't know why, but I just can't help but think that. And I'm nervous about it. You have a very strong double top up there at your all-time high. You're coming back into your prior support level, which is 68. And that's previous all-time high. You pulled back into it there in mid-April, and it became support. The 200-day moving average is also working its way higher. But I'm cautious here, guys. I'm cautious against this double top, and I'm cautious, on this potentially breaking back underneath this level, because if you break back underneath that level of like the mid 60s, you're talking about your next key major support levels at $50. Then you got another major level at, $40. And I think it's possible. I even think it's more likely than possible that these levels get revisited over the next, months or year or so. I think it's more likely that these levels get visited. I think that's more likely than the stock going to, let's say, 120. So I'm cautious on Celsius. I'm going to give Celsius, a C to a D. If you want to play it for a trade, you probably get a little bit of a dead cat bounce off of the high 60s. This is a good enough support level in my eyes that if the stock drops into this level, you can probably play like a quick dead cat bounce trade off of it. But I'm just not sold on the legitimacy of that bounce to really get going again. I'd actually be kind of cautious that bounce runs out of steam and then you end up falling back into that level. All right, so I'm going to give that one a C to a D. Probably not what you were expecting me to say, but, and also full transparency, I don't own Celsius. I never did. So yes, I did miss this entire rally. And would I feel differently if I bought the stock at $10? Yeah, sure, maybe. But as I look at it now, I never owned it, and I honestly have no intention on owning it. I don't plan on buying it. Maybe I'll look at it for a trade off of 68, but other than that, I don't have interest on it for the long term. Oh, man. E-Kitchens, are you a member? Username E-Kitchens, are you a member? Yeah, they're not answering. All right, so they asked me about GameStop play for tomorrow. I hate when people ask that question. Like, what do I look like to you? Like, oh, I hate when I get questions like, what's NVIDIA going to close at tomorrow? I don't know. And if you find someone that knows, tell me, because I would like to talk to them. I can't predict the future. Okay. As much as some people think successful trading equals predicting the future, it doesn't. There's not a single successful trader on the planet that could predict the future. And what usually happens is unsuccessful, inexperienced traders will spend their entire lives searching endlessly for the trader that can predict the future. And of course, they never find it. It's like searching for spending your whole life searching for a unicorn that's being ridden by a leprechaun. When you find one, let me know. I'm pretty sure I'm never going to hear from you ever again. And you're going to spend the rest of your life searching for a leprechaun that's riding a unicorn, to no avail. And when it comes to predicting the future, guys, that's not what trading is about. Trading for me is about identifying high probability setups and high probability patterns and putting myself on the right side of that probability over and over again with the complete and total understanding that there is no chart pattern that exists. Okay. There are no chart patterns that exist that work 100% of the time. There's no indicator that works 100% of the time. There is only probability. And it's our job to spot the probability and position ourselves for it over and over and over again with solid, sound risk management to make sure that the instances that we are wrong, we don't get hurt. And we always make more money when we're right than we lose when we're wrong. That's the key to consistent trading. So my thoughts here on GameStop is that tomorrow's price action for me is very important. You have this little indecision doji that was formed on the daily chart today on GameStop. You have this massive range candle yesterday, and the stock did nothing today. It did absolutely nothing. But the fact that it did absolutely nothing confirms that this support level is still intact. You have a very clear support level on GameStop in the mid-20s. This level is from about $24 to like $27. It's a multiple dollar wide range. It used to be support on the gap up in early May. Then you gapped underneath it. It became resistance on the 28th. Then you gapped above it yesterday. You dropped into it today and it held. What I need to see, if I'm going to think about a long on GameStop, you need to see the stock do this tomorrow. You need to see the thing recover. I am very cautious on GameStop experiencing a real true short squeeze. GameStop is not the same stock that it was back in 2021. The short position is way lower than it was. Okay. The valuation is much higher than it was. It is not the same situation as the short squeeze that you experienced in 2021. Now, that doesn't mean I'm not blind or I'm not oblivious to the fact that it could squeeze, but I really need to see. I need the stock to prove itself to me. I do. I need it to prove itself to me. And that would start with, let's say tomorrow, a move to 32. A move to $32 tomorrow, then it would have my attention. Okay. It would have my, no, E-Kitchens, no worry. You don't have to apologize. I just wanted to explain it. E-Kitchens, I just wanted to explain it. I just wanted to make sure that because if you're not a member and if you're new, I'm not trying to belittle you or anything like that. I'm trying to just make sure that you understand and realize that there is not a way to really predict the future. I just wanted to kind of talk through that. I think it's a helpful discussion to have with people to kind of make people realize what's real and make people realize what is truly possible and who are people that you should be listening to. I'm not saying that you should listen to me and me only. I'm just saying that if anybody ever tells you, I know exactly what the stock's going to do, they're totally full of shit. Just run the other way. They're completely full of it. And I wouldn't trust a word that they say. In order for me to feel good about GameStop, I need to see, some buying pressure in the name. There was no buying pressure in this name today. I'm interested back above 32. And the reason why I'm interested back above 32 is I like that intraday resistance that we had yesterday. And somebody asked me about GameStop yesterday when I was doing my live stream. And I said, I'm really not interested until the stock gets over 32. Once the stock gets over 32, then it has my attention. Then I'm going to look for possible longs. Until then, I'm not touching it. I don't think it deserves my attention. I don't think it deserves my money. I think there are far better things to trade right now than GameStop. If it gets over 32, I'll start focusing a little bit more on it. Last one, guys, before we go, I see people asking me about CCJ. I really do like this one. Okay, I do like this one. Full disclosure, I own CCJ in my long-term portfolio. I bought it in January of 2023. Right there, it was in my stock market outlook report that I issued to all True Trading Group members at either the last week of December or the first week of January. Within that 2-week time frame, okay. Within that 2-week time frame, I always issue a stock market outlook report. I tell people This is what this is what I think the markets do this year. These are the sectors that I think outperform. I always pick a commodity that I think is going to do well. Uranium was my commodity pick for 2023. I told people it's a multi-year hold. CCJ, BWXT, and URA are the ticker symbols that we bought. CCJ, and this is all January of 2023. So CCJ, okay, there, and then uranium, URA, okay, here, and then also BWXT was the other one, and that was also here. Okay, so these stocks have done extremely well for us in the long-term portfolio. I am still long, and I want to stay long. I'm looking for CCJ to see if we can break through this vicious double top all-time high from 2007. Okay, so you have a very strong double top there for 2007 at $56. We just recently ran up and tested 56 and then pulled back. But that pullback took you back into prior resistance. And I like how we're starting to base up here now. You can see resistance, 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 broke above it, cleared the level out, pulled back into the level, support, and then again today, support. So as long as CCJ is above 51.5, I'm still thinking long. And let's see if we can actually break through that all-time high. Uranium itself has pulled back the last 2 days. CCJ has pulled back the last 2 days along with it. But I do like that level that is holding, and I'm still looking at this for the potential long. Okay. Last one, guys, I see, and I only want to hit on this one because I did mention a trade idea that I had on Spotify. It's actually a trade that I also made. That ended up being incorrect, and there was news that made it incorrect, and I'll explain to you guys what took place. So Spotify right now for me actually looks extremely bullish, and the reason why it looks extremely bullish is because we broke through, and I was looking at Spotify for a possible short Sunday evening, and I'll explain to you why I was, and I'll explain to you why this stock is actually moving higher, because it's a news-related move, and there's no way I could have predicted that there was going to be this piece of news. So I'll go over the chart setup with you, why I was looking for a short. The one thing that I will tell you guys is there's nothing more bullish than a failed bearish move, and there's nothing more bearish than a failed bullish move. Okay, never forget that. So when we go back here and we take a look at Spotify, you can see clearly that we had this beautiful support level back in 2021. You broke underneath it, and then it became this big level of resistance, right, in 2021. We got back up to that level here in 2024. And you can see every time we got there, resistance, 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 resistance. And then when I was doing my live stream on Sunday, I put Spotify on my watch list for a possible short if it broke this if it broke this uptrend line. So here's this uptrend line on Spotify. See this uptrend line? It's about as perfect of an uptrend line as you'll ever see, right? See that? And then what else is here? The dark blue line, that's your 50-day moving average. So you had this beautiful uptrend line against this really tough resistance level. And I said, guys, if Spotify breaks this level, I'm going to look for a short. Okay. I said that on Sunday night. Well, Monday, the company comes out with news that they're raising their prices. And their CEO said, we're raising our prices because we can. And said that and put out some really good information and some really good data. And there was an analyst note about it as well, comparing audio streaming to video streaming. And they were showing that the audio streaming has far less turnover and it's a much better business model than the video streaming. And Spotify is doing much better and has a much easier time keeping its customers than Disney Plus, Netflix, Hulu, Paramount, Amazon Prime, Apple TV. That it's a lot easier for Spotify to keep their user than it is for a Netflix, etc. And that note all of a sudden gapped the stock up huge. And now the stock is broken out and this level's cleared out and the stock has exploded today, up 4.5%, up $14 a share. So there's no way in hell that now you can say to yourself, let's look at this thing for a short, obviously. So I did want to just address this because I did mention it on Sunday. We talk about all the ones that we're right on. We got to also talk about the ones that we were wrong on. But when we're wrong on something, we have to talk about why. Why were we wrong on it? It's a news-related move, and it's a good one. And that stock has cleared that level out. I think you have to look now for further upside on Spotify. All right. So that's it there, guys. That does it for me. Okay. Oh, nice. E Kitchens. You subscribed to the channel. You saw me on Trader TV Live. Great guys over there, Trader TV Live. Yep. Sean, awesome dude. Okay. Awesome dude. All right. So happy to have you here, E Kitchens. All right. So guys, that's it. Thanks for tuning in on the live. Hope you guys enjoyed that segment of Grade My Stock. If you've not yet done so, go to ttgthree.com. That's TTG3 spelled out.com. Enter your name, email, phone number. Click yes, I want this. Fill out the form. Pay the $3. Get your butts in chat. Remember, it's a one-time payment. There's no automatic renewal. There's no recurring fee. There's no automatic upgrade. It's a one-time payment of $3. Be the best damn $3 you ever spent in your life. All right. If you haven't done so yet, folks, subscribe to the channel and show some love. Smash that like button. I will see you all tomorrow. Have a wonderful rest.